Ira Epstein, and here we are on Wednesday, February 18th, 2026 with your Spider Stock Market Report. All right, my friends, we are sitting here right now looking at market that had a bit of a rally today. A lot of green, I think you'd agree with me on the screen. Backing off a little bit in bonds, which have been on a tear to the upside. Lilly down another $15, can't seem to get away from the problems it's having there. NVIDIA up 3 on the day. Gold did jump, and so did GDX with it, by the way. Boeing down 5. Rivian giving back another 30 some odd cents. ARC down $1.29 today. Goldman Sachs up $17. And URA. So we're looking again at uranium. Doing a nice job of holding here. I'm going to do a little more coverage on that very shortly. Before I get into everything and the reports tomorrow, let's take a look at something together here just for a moment. Let me get this going. And I want to bring it right here because what you're going to see is remember I said I was going to do a currency report, and I did. And I talk about the US dollar and where it might be going. So the report will cover quite a bit of data for you. It will have the UUP in it. That's number one. You're going to get trend chart analysis. The commentary that I make is what I'm seeing on the charts, and I give a little bit of talk as to what I see. Seasonal charts. You're going to get those. More research. You're going to get the QT price counts in here. The impact of the world events, because everybody was so short the dollar, it's now in a bit of a rally mode. So all you have to do to get this is just go up here. IraEpstein.com. You'll see the icon. Give it a click. You can do it right through here. And when you get to the website, I'll do the one with the free offers for it. Just look on the top left. You'll see the currency report. Okay? So let's go back now and talk about the data. You're going to get jobless claims in the morning at 7:30 and the Philly Fed Regional Business Activity Index at 7:30. U.S. trade balance is going to come out at 7:30. National Association of Home Realtors, I should say. The January U.S. pending home sales. So we'll want to see how much action there has been. Remember, mortgages are near 6% again. I say that almost facetiously. They were under 3% 2 years ago. The Conference Board U.S. leading economic indicators will come out at 9. Natural gas storage report, and then the energy report. We had the API come out today. And we're going to get the EIA tomorrow, I believe. So I called it API. It shouldn't be that. API came after the market today. So now let's take a look and go back to the quote screen. And here we are. And let's go right to the first chart. And I'm looking at this week at Cloudflare. Now remember, you can write me. Just go on, if you're watching it on YouTube, just write there what you'd like me to cover. I want to do more rotation during the week. And that's the way to do this. So as you're looking at it, you can see how the market came up, backing off a little bit. The swing line is bullish. This line, this light brown, excuse me, I connect them either to the prior day's high or low. And what you've got is a pattern here of higher highs, but now, higher lows, and suddenly you're getting a little bit different. You've now backed off on making the higher highs. You really have to get over this 201.66 to keep going. Otherwise, the odds favor. The market might want to back off a bit more and get closer to that 18-day average of 182, about $9 lower. We'll see which one it wants. When you look at the Bollinger Bands, you can see what's stopping the market. Each time you've gotten up here, it's like a break on it. And in addition, as you look, you've got the 100-day average right up there as well. So the resistance is pretty formidable above the market. That doesn't mean the market's bearish. It isn't. It's in a bullish mode. You have the swing line pointing up. The bias is up since the market's over the 18-day average, and momentum is still pointing up. And as you can see, neither of the readings are over 70. They're not overbought. When I look at Caterpillar, if the market can break down here, it's got to do so by getting right under here, under 747.42. Now, that's one thing, but there is a negative that happened today. If you take a look, you still have both numbers embedded. It looks like, though, if you're not up tomorrow, you're going to lose that, and the market comes down under 79. The odds favor they're going to get more of a price correction to the downside before it rallies again. In IGV, You have the bearish embedded reading. So as far as I'm concerned on rallies, the trade is looking to sell this market, not do anything else. In other words, software hasn't shown yet that it's coming out of a problem. Get the red line here, which is sitting at 15 to close over 21, then I'll say we're going to get a short covering rally, maybe more than that. In Apple, we keep coming back up now, 2 days in a row to the 100-day average in the 18, and it's run into a bit of a brick wall temporarily. ET, and this is of course is energy transfer, it had a big spike today and couldn't hold it. It doesn't want to get away from that Bollinger Band is what it's saying. Yes, it's in an uptrend. Yes, it's overbought, and it's not trying to embed. So I think the pros are taking money off the table. In Google, was that enough? Now, if you watched my morning video this morning, I said we're getting beaten up in a lot of these stocks, but the bottom pickers have come out. And you see that. They came out today, and that's what I said. You see the jump back over the Bollinger Band. That doesn't mean the trend has changed, but you are oversold. You're at a point where the market doesn't need a reason to come alive. So we have to see what that part's going to do with it. We'll see what that all means. When we come to Rivian, market got over the Bollinger Band one day, and now it's falling into support at the 100-day average of closes. The trend is up, the bias is up. I think the market will find buyers probably at 15, 14 to add another layer to what they already might own. In Dual, which is Duolingo, all right, one of you asked me to cover it, but I won't keep covering it day after day until, and I'm going to repeat this for you, until you lose the embedded reading, the market's still under the influence of the sellers. Lose that, and that's when you can get your bounce to the 18-day average of closes. In XLF, we have a higher high, a lower low, no trend, resistance right through here. The market has corrected, past tense. Well, let me say that differently. You still have one of the numbers, 29.84 that you see there, is under 30 still. So you're still in an oversold condition. The odds favor it'll be out of that when the market reopens in the morning. In XLI, as we look at the market through here, you can see that you have a 79.54 reading. The market was trying to embed, not able to do it, but certainly in a bullish state of mind. When you look at XLE, did you see how the market ran today in the energies? All right, the crude oil up sharply to $2 a barrel. And the reason is, as I said yesterday, I don't believe that anything could have come out of this meeting between the U.S. and Iran than both sides saying, nice to talk, yeah, we're focusing, but privately, get ready for war, get ready to defend against America. Those are the two sides, and that's where you're going if Iran stays this route, in my opinion. I am not a military expert, but I'm an expert enough to know that the U.S. doesn't want to let Iran keep enriching. And this idea that they're willing on their own to dilute uranium that they've taken up to 60% grade for weapons, no. If you want to believe that that President Trump will go in for that, fine. And he surprised all of us. I'm going to stick with what I think the man's made of. Do it my way, or we'll do it really my way. That's what I believe. In GLD, it's so far just a rally back up to the 18-day average of resistance. Not getting excited about the market. WMT, Walmart, we just had earnings. Boom! Market didn't like what it saw. But it had been going up strong as can be. This has been the powerhouse stock. This is where people pied into is even the better word. And the reason is it was away from software. It was away from chips. It's like Caterpillar. They're going to buy my goods, and we have the best prices and the best stock and the best way of doing business. But now the correction is beginning. So 125, very possible to get down to here. Microsoft just can't get out of its way. I love their business. I love their business models. But until it's good off the chart, doesn't mean anything to me. I'm certainly watching the embedded reading. If it loses it, I think you'll get your rally to the 18-day average. But you're a long way off from me saying, oh, this market's bullish. I'm not seeing that. BND got ahead of itself. You don't stay over Bollinger Bands more than 5% of the time. So pulling back in is fine. It's trying to embed that stochastic reading, which will give it more power. We wait and we watch. Last but not least, I just did the report in the dollar index. You can see what it's doing. In a way, you're getting your climb there. FXE is the other side, 57% of the dollar index, and it's coming down. It might be going down here, and that's where I'm at on all this. So we'll see where the markets want to take us one way or the other. Even Uber finally came alive with the $2 rally. It's just been beaten up terribly. So are the bottom pickers out? Yes. Should you take a look at what I did in this special report? Yes. Remember, just move your cursor to the top there or here and write me when you're on the YouTube channel, what do you want me to cover? And I promise you, if I think the stock's worth covering, I'm going to put it up, and I'm going to put it up right away. You have a great day.